this is a big project in a great location and a short timeline, very importantly, a short timeline till we can start construction. About 30 ounces of gold for every 1,000 shares of Revival Gold held. So that's tremendous leverage. You know, in an environment where the gold price is on the rise, and when we've got exploration potential, NAV already outlined on these projects, we're trading right now at about 0.15 times NAV.
All right, today we're having a chat with Hugh Agro, the CEO of Revival Gold. And Hugh, what a time to be developing two gold stories in the United States.
Oh, this is what we've been waiting for. This is what we've been preparing for.
Yeah, very exciting. You currently have a 2025 Fieldwork program ongoing for both your Mercur and your Beartrack-Arnett program. Perhaps you can outline for first Mercur and then we can go from there.
Yeah, the priority is Mercur. It's our fastest project to production, and we want to be moving to construction and production in this gold price cycle. We got $3,400 gold. It's a wonderful time to be in the gold business and have an asset in a good geographic location that we can develop. So that is the priority. We're already underway with roadworks, drill pad construction, and we've got a drill rig arriving end of this month and a second rig arriving in July.
Okay, that's advancing quickly, and perhaps we can talk about the rationale behind that drilling campaign, what you're really trying to achieve here.
Well, the first objective is to convert about 40% of our resource, which is in the inferred category, into the measured and indicated category, so de-risking the resource. We've got about 10,000 meters of drilling planned for that purpose. We'll start in our rover area. In preparation for that, earlier this year we completed a 5.7 square kilometer soil sample program. And so we'll get underway with that work. These are shallow drill holes, for the most part less than 150 meters deep. RC drilling, which is relatively quick and low cost. And so that's the focus of that first 10,000 meters of drilling. And then we'll do another 3,000 meters of drilling with a PQ core for the purposes of collecting metallurgical test samples for further column heap leach tests. So these tests are important as we move the data that we have beyond the initial 5 column tests that we undertook last year. Very successful, but we need to move that testing out into the broader reaches of the deposit. So that's the focus of that drilling and the metallurgical test work that will go alongside of that.
Yeah, and of course, both that upgrading of your inferred resources, I believe Mercur has 1.4 million ounces across those categories, of which 0.6 million, 600,000 ounces are in inferred category. Of course, if you would like to include that in an feasibility study or pre-feasibility study, you would need that to be a higher category, right?
Correct. Yeah, that's a good observation. The other thing we want to do, of course, with our drilling is expand, and we see some really interesting opportunities to the northeast and in our South Mercur deposit area. We've got about 1 kilometer of strike that's open. We've got 2 pits in that southern Mercur area, which are in a lithological unit that continues to the north, and we see opportunity there for another kilometer of exploration. So we'll want to be testing that as well. And all of these things are geared at de-risking and improving the economics of our heap leach project at Mercur. In the meantime, the other thing we're doing is advancing baseline study work. We've now got 6 expanded drill permits for the project, and we're working to develop up the baseline study work to commence formal permitting next year on the project.
Yeah, exciting development pipeline work there, that's for sure. And of course, that's a hard balance to strike if you have a land package like this around Mercur and you already have a deposit which is potentially economical at 1.4 million ounces, as your PEA has shown in the past. Perhaps we should also touch base on that, of course. But you also have so much exploration upside. Where do you allocate your resources to? So perhaps we can outline the rationale on how you're currently trying to balance that.
Well, the first thing is there's some obvious right next door to the existing resource opportunities. I mentioned the one in the northwest rover area and to the northeast rover area and beyond, and then in the South Mercur area. So those will be the top priorities for us this year. Depending on how things go through the season, we've got a number of opportunities in the West Mercur part of the project. We've only got about 0.5% of the drilling that's been deeper than 400 meters on this project. We know these big Carlin systems have traps where mineralization can collect, a higher grade mineralization can collect. And that, of course, is where the Barracks of this world are chasing things like 4 Mile and Cortez Deeps in Nevada. Same geological system, a Carlin-type system, and chasing undercover for opportunities in the underground. So we will definitely be wanting to do some of that, and we'll look to try and get to some of that this year. It might fall to next year. But the land package is about almost 7,000 hectares, and it's been entirely underexplored, in particular in the western part of the property.
And that metallurgical test work that you outlined also, of course, to prepare yourself for the PFS and feasibility work later on. Perhaps you can outline how that would look like and really how that would advance the project further.
We got about 84% average recovery in our first 5 column tests last year. And what was really exciting about it was we got about 90% of that recovery in the first 5 days of leaching. So those are really good results. For the purposes of the PEA published a couple months ago, we used an average 75% recovery, so a little bit lower than what we got in the column tests. And so the focus of our work this year will be to expand the area of testing on the deposit, and also to do variability testing. That is to say, to look at crush sizes different than what we have tested in the prior work, to see if we can even optimize further on our heap leach recoveries. Certainly there is room to move up, but we'll need more data to do that. And so that's the objective with this work. So these are major de-risking steps. I can tell you there's a lot of interest in what we're doing. The project's about a half an hour from a town of 40,000 people in the great western state of Utah in the U.S. Large land gold endowment already, and opportunities to grow makes this a really special place to be. And our intentions, again, are to go as quickly as we can to a construction opportunity here, and then to continue to grow the resource for what we think is going to be a very long life mine in a great geopolitical jurisdiction.
Thanks for that overview, Hugh. Really appreciate that. Another topic of your 2025 fieldwork campaign is also the soil sampling that you have already completed and is now being assayed. Perhaps you can outline, I believe there's 1,000 samples you've taken over 5.7 square kilometers, roughly where on your project that's taken and really what that will hopefully tell you.
That was in the rover area. As I mentioned earlier, it's a precursor to the drilling we'll be doing there starting very shortly. It will help identify the places where we can find the most success with the drill bit. Of course, we're looking for gold on surface, and the expectation is that if we can find it on surface, we'll chase it with the drill hole to depth, and that will lead to more success with our drilling. So it's really about focusing the targeting of our drilling, which will come up very quickly here in the rover area. And remember, this is a large geological system in embedded structures that extend horizontally for quite some distance. So there's opportunity to expand on the deposit, and the best way to find where that gold is going to show up in the drill bit is to start at surface with these soil sample programs.
Great. Thank you, Hugh, for that overview. Of course, we've now been talking about the growth potential of Mercur. There's also, of course, the development project, and we've been talking a bit about both, of course. You have already done a PEA, preliminary economic assessment. At the current gold price, or at least the gold price of $3,000, your NPV, net present value, is about $753 million, with an initial capital expenditure of $208 million. Very exciting results. Perhaps you can outline how you would really advance that project from here on out to a potential construction decision.
Well, the first steps are the ones we've been talking about. Then we'll go to a PFS. Meanwhile, we'll commence the permitting for the mine proper beginning of next year. That's a 2-year process from start to finish. So by the time we get into the beginning of 2028, we want to be turning a shovel for construction. And so we'll do a PFS. And then we'll start work on detailed engineering and a bankable feasibility study, so that by the time we get to the middle and end of 2027, we're ready to start financing and be into a construction mode by the beginning of 2028. It's all going to come fast and furious. 100,000 ounces typically per year of production, an average of 95,000 ounces a year over a 10-year mine life. If you think about that in the context of the current gold price environment, that's over $300 million a year of revenue from the project. So this is a big project in a great location and a short timeline, very importantly, a short timeline till we can start construction.
Yeah, definitely a short timeline. And thus far, we've just been talking about one of your two projects. Of course, you have a second one in Beartrack-Arnett. What is the statistic again? How many shares do you need for how many ounces?
About 30 ounces of gold for every 1,000 shares of Revival Gold held. So that's tremendous leverage. You know, in an environment where the gold price is on the rise, and when we've got exploration potential, NAV already outlined on these projects, we're trading right now at about 0.15 times NAV. So if you think about that, for every dollar of underlying gold project value we have in our company, you're paying just 15 cents in our current share price of Revival Gold. Another way to look at this is to look at the infrastructure that we have on our projects. And as you know, Revival, the name is all about reviving successfully past producing gold mines. And we've got about $50 to $100 million worth of infrastructure. If you look at our stock price, that alone pays for the stock price. So the bottom line here is we've got a ton of value for investors. The upside, I would say, is much greater than the potential downside, and investors in the junior resource space know that there is risk associated with projects like Revival Gold's. But what you want to be doing is positioning in companies that have a lot of upside and not a lot of downside. And I think we're that company. We've got two projects, which means we're diversified. We're in the Western United States, which means we have low geopolitical risk. We've got exceptional value with some $530 million of underlying gold NAV in the company, which translates to super value in the stock. And as you have had me point out, for every 1,000 shares held of Revival Gold, you get 30 ounces of gold exposure. So really good value here. And at $3,000 gold, the metrics just improve dramatically. So that $500 million of NAV goes to $1.2 billion of NAV at $3,000 gold. And of course, we're already through $3,000 gold. So all of that coming to you for a market cap today in Revival Gold of about $75 million. I can tell you there's a lot of people looking at the company right now.
Yeah, especially because as you outlined, we're through $3,000 already, currently at around $3,400, so that NAV might even be higher, and its price on NAV might even be lower. So is the phone ringing by majors who want to M&A with you?
Look, I'd say there's a lot of interest in our company right now, and yes, there's majors that are interested. We've got tremendous exploration potential. We've got the Carlin-type deposit at Mercur. We haven't talked at all about Beartrack yet, but that's another 6,500 hectare project, orogenic gold system, 4.6 million ounces of resource, and 5 kilometers of open strike, which we're going to be drilling later this year. So that's very exciting to the big companies as well. But we've also got intermediates, and I think that's very interesting to us, and financial strategics. Financial investors generally. There's a lot of interest in Revival Gold, and yes, the phone is ringing. It's a good time to be in the gold development space, especially since there's such a scarcity of projects. And I think it's really interesting that the Barrick Gold, the once industry leader, has retreated from replacing reserves in gold, retreated from good geopolitical jurisdictions, and is going elsewhere to copper, to Pakistan, to try and fulfill their their pipeline for future growth. It's just that difficult. There are not a lot of really good projects in good locations. We happen to have two of them.
Excellent. And of course, talking about that price to NAV ratio, there's two ways really to go about creating value. You can increase that ratio through de-risking, and you can also increase the NAV. And of course, Revival Gold is doing a bit of both. But perhaps you can outline really how your vision is on that. Of course, you're currently trading at a very attractive price. I think we can all agree on that. But what is your vision on trying to upgrade that price a bit and try to create shareholder value?
Well, it's partly in getting out and talking to audiences like yours. This is really important. This is where we get the story out to all these interested parties and make sure people are aware of us. We were just recognized by Rick Rule, one of the industry greats, and we'll be attending his conference in July. Presenting to the audience there in Florida. We'll be on the road again in Colorado with the Precious Metals Summit. We've got a lot of equity analyst coverage on the stock. Velocity Research just picked up coverage with a big research report. We're already 50% institutionally and corporately held. Of course, Dundee Corporation is a strategic investor in the company and some of the industry's best investment funds alongside of them, but we'll work to expand on that network of investors in the company. And I think as we grow, success begets success. This is a special time, a special opportunity, and I would say it behooves one to get involved in our company. I'm always happy, Stein, to answer calls and questions, emails from folks who are interested in what we're doing. This is the time when we're really pounding the table hard because we've got such a great business to pitch to people.
Yeah, more than happy to include some contact details in the description below for anyone watching who wants to reach out. Perhaps we can zoom into Beartrack-Arnett. Of course, you outlined we haven't really talked about that just yet. Perhaps you can take us along what you're really trying to do with your 2025 fieldwork program on Beartrack-Arnett.
Well, it's something we've been itching to do since a year and a half ago. As I mentioned, we've got about 5 kilometers of open strike on the system at Beartrack-Arnett. Already with 5.5 kilometers of mineralization outlined in a shear zone in the deposit. These things can be extremely prolific, and not only do they extend horizontally north and south, or along the axis of the main mineralized trend, but these systems also tend to go to depth, upwards of 2 kilometers. And we've only drilled down here on the Beartrack-Arnett system to about 600 meters at the deepest point. So we've got lots of potential at depth and lots of potential along strike. And the place that we're immediately focused on is just south of the ADR plant at the apex of the property position that you're showing on the screen now. The trend of mineralization continues to the south. We've got geophysics data now, soil geochem data, and structural modeling, which helps point to the places that we need to go in and drill. We'll be drilling in 2 locations with about 4,000 meters of drilling starting in this fall. And the primary area we'll be in is Joss, where at the tail end of the prior drill season 2 years ago, we intersected some beautiful mineralization. It's open. We'll continue south of there to the Sharkey area, where we've got no drill holes yet into the system. So this is pure exploration, and we're really excited about what that's going to reveal for us. And basically connect the dots as we move down this structural trend, which has been highly prolific for us. And while we're doing that, we're also working on metallurgical testing as we improve our understanding of the deposit and how we might exploit it for a potential underground mine. And that's the second phase of development at Beartrack-Arnett, and it's the one that I think will take us up on that project to perhaps 150, 200,000 ounces a year of gold production. The initial phase is just 65,000 ounces a year, but it's a low capex phase. We reuse existing infrastructure, and while we're doing that, we're continuing to explore the deposit and grow the potential.
Of course, and those production figures, even at the current gold prices, are quite attractive, especially if you can get it with a low capex. Touching base again on the exploration potential, I believe your resource is around the 1 gram a ton range, and you outlined your most southern drill hole. I believe that was released in 2022. That was about 6.2 grams a ton over 14 meters, so that's significantly higher than your resource potential. So the exploration potential in that area is quite exciting.
It is. There's about 20 holes in that Joss area in the center of the property position, and on average, we intersected over 40 meters drilled width with about 3.5 grams of mineralization, and then within that we've got this higher grade core mineralization running, 5, 6, 7, 8 grams, and the sort of intercepts you referred to earlier. So this is a really interesting place to explore. We've hit with every drill hole through the structure, and this year we'll be drilling more.
Yeah, and perhaps we can talk about how hard or how easy this trend is really to follow. Is it like a quartz vein that's quite hard to follow, or is it a bit easier to spot in your drilling?
Well, the main thing we can say is that there isn't a lot of exposure, right? So the structure doesn't come right to surface, it's covered over. And so we need to use remote sensing techniques. I mentioned the geophysics, I mentioned soil geochem. We're looking for geochemical anomalies in the soil on surface, which would indicate that the structure is close by. So those are the two main things that we do. We also can find some outcrop, not a lot of it, but we can trace that outcrop, and we can use that with structural measurements to develop up models of what's potentially underground. Now these are just models, but we've got really good geologists. Our chief geologist, Dan Pace, is a co-discoverer of the Silicon deposit in Nevada, now some 13 or 14 million ounces. So he's a mine finder, and he knows how to use this data-driven approach to lower risk and develop targets for high returns. And that's what we're focused on doing at Beartrack-Arnett.
That is an exciting prospect for sure. And perhaps we can also talk about the potential of finding this high-grade zone around Joss. In your development strategy, of course, you're going to take this project further along. There's a couple more years before this would go back into production at the earliest due to permitting and such. But if you were to find a high-grade zone there that you could potentially bring forward in your development, that could be like a high-grade starter pit type of scenario.
Well, it will be an underground project for us, which makes it potentially a lot easier, because if you think about it from a disturbance point of view, a surface disturbance point of view, an underground project just has a portal access and very little disturbance on surface beyond the existing mine infrastructure. So that could be very advantageous to us. The other thing that's an advantage to us, of course, is if we're mining underground higher grade material, we move less material to get more value out of the rock. So this is a really exciting option value for us. Of course, none of this is priced into the net asset values that I've talked about, because we haven't put engineering studies around it. We've done internal studies, though, that give us indications that there's a lot of potential value here. I mean, I'm talking about a doubling of the overall project value in Revival Gold. It's that important, it's that potentially rewarding, and we're drilling there this year to unlock some of that potential.
Wow, that could be substantial. And then, of course, again, a question that I asked earlier for Mercur as well. How do you balance this exploration potential to the development potential? How do you view that unlocking shareholder value? Because you already have a feasible project there. Couldn't your capital perhaps be better spent trying to develop that quicker?
It's a balancing act. I think the fact that we've got two projects, one very clearly moving to production, allows us to focus our efforts on the second project on this exploration. And I think a key consideration for us is bang for buck. So we're not talking about doing thousands and thousands of meters of drilling. We're talking about doing approximately 4,000 meters of drilling at Beartrack-Arnett this year, and very targeted, so that we can show scope and scale. I mentioned earlier that there is a lot of interest in the sector right now with the gold price where it's at, and I think this is the time to show people the broader potential of the property. The investors and corporate strategics are really interested in that, and so we can invest those dollars and get high return out of them. I wouldn't have said that 2 years ago. In fact, we have paused on the exploration of Beartrack-Arnett over the last a couple of years as we've advanced in other areas with development and with our Mercur project. But this is the year to go back and continue to expand on that option value that's in our stock. Remember, for investors buying shares of development companies, you're taking the risk of the development, but you're also getting a lot more exposure to gold, and not just the gold that's already in NAV in engineering studies. In our case, about 2.5 million ounces of gold in engineering studies. You're also getting the 3.5 million exposure to the 3.5 million ounces of gold that are not in engineering studies that could go into engineering studies down the road. And then further to that, you're getting exposure to exploration. So this is the optionality value that one gets with these projects, and layered on top of all of that, of course, is that as the gold price rises, that reflects itself in the underlying value of the project. So there's what we call real option value in terms of upside leverage to the gold price. So this is the exciting time to be in the space. This is absolutely the kind of leverage that one can get in the business. NAV leverage, resource leverage, exploration leverage, and real option value leverage to the gold price as it goes up.
Yeah, I think that's a great overview of the potential of investing in a gold developer in a rising gold price environment. 100% well explained, Hugh. Thank you for taking so long there. I want to take you back a bit more to the details of Beartrack-Arnett, the work that you're doing there. You highlighted some of the metallurgical work that you're doing. And I believe in the news release you outlined that you're testing two different versions. One using cyanide and one that's cyanide free, I believe. Perhaps you can take us along what the rationale behind is that and what the potential of that is.
Yeah, thanks for bringing that up. Our strategic corporate investor, Dundee Corporations, has an arm of their business which is focused on metallurgical techniques. They've got two processes that are interesting to us. One is is glass lock, which is about retrieving arsenic and concentrates, and the second is a alternative to cyanide as a leach tool for leach projects. So we want to explore both of those opportunities, and we're doing that now. We've got test work underway, a 60 kilogram test sample, which is representative of our underground material, is in testing with Dundee Sustainable Technologies. Our VP Engineering Development, John Meyer, is extremely capable in this area of metallurgy and working with the DST team to optimize the results we're getting. John's done a lot of work in looking at our underground scenario. He's a real industry leader in this area. Not just from a metallurgical point of view, but from an engineering point of view, a design optimization and value point of view. So that work is already underway internally, just to build up our understanding, and then with this test work we'll wrap up later this summer from Dundee Sustainable Technologies. Really interesting stuff going on in the mining industry about improving our ability to responsibly mine and deliver resources for the world economy.
Thank you for that overview. And one direction my mind went to was also permitting potential. Should you be able to actually free gold, liberate gold using that cyanide-free option, which is of course what you're currently testing, would that potentially help with permitting, you would think?
I do think there's a permitting implication, yes, particularly as we think about a concentrate operation, so the possibility of mining underground material, producing a concentrate, and then potentially liberating the gold from those cons using a clever type process. Again, a lot of testing still to go on that, but these are the kinds of steps that I think industry needs to take to bring innovation to our processes and our results. And this is all with the view to doing a better job of responsibly, as I say, delivering metals to the world economy.
Great. Hugh, I think we have a great overview of the two assets, what you're currently doing, 2025 field program. Very exciting. Perhaps you can take us along really how the next couple of months to years will look like for your company, what the big catalysts are, and how you're, if we summarize the two projects together, how you're developing them.
First priority is our Mercur project in Utah, some 95,000 ounces a year over a 10-year time frame. So we're marching that forward, de-risking the resources, developing up additional metallurgical data. We'll move to PFS, formal permitting, and we're looking to be turning a shovel on this project in early 2028 for construction. The second project is our Beartrack-Arnett heap leach project in Idaho. That's a relatively modest $110 million of capital to restart existing infrastructure and produce an additional 65,000 ounces a year of gold. So total production by the time we get through that second phase of development in Idaho will be about 160,000 ounces a year of gold from heap leach operations. Beyond that, we spoke a little bit about the second phase at Beartrack-Arnett, which takes us into the underground and the possibility to take our production corporately up over 250,000 ounces or a year or more of gold from the domestic United States. I can tell you our CFO, Lisa Ross, really likes this phased approach to development because from a capital point of view, we can generate cash to reinvest in subsequent gold production stages. And so that makes for an efficient process for us. And the other thing about it is we're not doing anything that's particularly unique. These are projects are relatively standard in their approach to development. Of course, we're on these proven production sites, so we've got a lot of expertise with the rock and how it will perform, the setup, the community support. All of these things bode well for our future path to production.
Thank you, Hugh. I hope the phone keeps ringing for the next couple of months. Very exciting what you're currently up to, and best of luck in your 2025 field program.
Thanks for having me. Love to talk about the story. This is the time to pound the table. We've got a great couple of projects in a great location with pathway to free cash flow in a rising gold price environment. I don't think it gets much better than that.